Hi friends. So we meet again for our Multibagger series. This is the seventh episode, and I'll now be giving you the seventh stock for the Multibagger series. Remember one thing, guys: the market is undergoing a severe correction. We are into a kind of a bear market because the small caps have fallen by around 23-24% from their highs, and mid cap is also around 19-20% down from its highs. So any index which goes down below 20%, we technically call it as a bear market for that particular index. And now, since we are in those kind of corrections, probably this is the best time to garner to add to your portfolio these kind of multi-bagger stocks which have very strong fundamentals, which have very good past history, and they are catering to a business which is looking like it is growing in the future times to come. Considering India is a developing country and we want to become a developed country by 2047, so don't miss these kind of chances of picking up these multi-bagger stocks at these prices, wherein the market is going some kind of a consolidation, or let's say a kind of a correction in a structural bull run, but a small correction to probably help you or to exchange hands within the stocks, which can gain or which can take the which can hold these stocks for a longer period of time. And anyways, many of the experts in stock market always says that stock market probably is a medium of change of hand between impatient to patient. So this is a time when the impatient players are moving out of the markets, and now is the time for the patient people to enter the markets. So with this, we'll start this presentation on Motilal Oswal Financial Services. This is the stock which I have chosen for the seventh series as a multi-bagger stock. Beautiful company with very good fundamentals. We all know Mr. Ramdev Agarwal, who's one of the co-founder of this company. We have seen a lot of interviews from him. We all know how he has made his wealth and how optimistic he is about the Indian stock markets and the India's future in coming decades to come. So with this brief description, we'll move on to the next slides. So what's a multi-bagger stock? A multi-bagger stock is a stock that can give you returns of probably more than double of its investments, initial investments. A stock that quadruple will be called as a four-bagger, and similar fourth for any kind of multi-fold increase. This was coined by Peter Lynch in 1988. So that's we have discussed this all these terms anyways in all our six series. So I'll not take too much of time on this. But a very good quote, and this quote is coming from Indian investor as well. But this is what I picked up, and these words are not to be found anywhere. So I have made it in my own language. The markets give you a chance to buy a rupee stock in 25 paisa, but you should have 25 paisa in your pocket when that chance arrives. So, you'll find bear markets from time to time. We all know that every 5 years, generally, we expect markets to correct by 20 to 30%. And every 7-8 years, we always anticipate a black swan kind of event where the markets even correct up to 50%, 60%. But, and that is a time when you will have a good stock with good intrinsic value, good fundamentals, which has a value of around 1 rupee, but you will be getting that particular stock at 25 paisa, one fourth of its actual worth. But that is a time when you should have money in your pocket. That time you should have strength, conviction, knowledge, and your patience to hold that stock for a longer period of time. Those all things, characters, if you have in yourself, and if you have this that kind of money in your pocket, that is a time to gain these kind of stocks or to add your stocks in this portfolio. I've already told in my opening remarks, probably the time is there. We are almost near to the bottom, as I've been telling this in many of my videos, which I record on daily basis. So this is probably a chance to, staggeringly add some of these beautiful stocks. Again, a quote from Peter Lynch, which we follow a lot. He's one of the gurus of stock market. Behind every stock is a company. Find out what it's doing. So when you're buying a stock, we all know that we're not buying a stock. We're actually buying a business, we're actually buying a company, and we should exactly know which sector this company is catering to, what are its fundamentals, how are its owners, what is the expected market share this company is expected to grow in future years, what is the overall breadth of the sector which is catering to, and what is the chance of this particular sector growing in future. That things, if you know in a company, then only you buy that stock, and once you buy that stock, you're actually buying a company. That's what the quote for Peter Lynch says. We want in a multi-bagger stock, we want it to be a high revenue growth. So we want generally a stock which is growth of around 20% for several years. We want a large addressable market. That is very, very important. So multi-bagger stocks are generally those stocks which have large addressable markets, and the pie is increasing. That is even a cherry on the cake. It should have a disruptive potential. Generally, it is not a compulsory thing, but if it can, then your money can, become multifold much faster. That's the thing. Of course, we don't compromise on the fundamentals. We want to have a stock which is grown, which has solid financials, robust revenue growth, increasing profits, and healthy cash flow. Those are the fundamentals which we never should compromise on. Again, a quote from late Rakesh Jhunjhunwala, which he says that markets are like women, always commanding, mysterious, unpredictable, and volatile. So, even if you see today's market, or let's say the market which we are seeing from last October onwards, nobody expected that we'll go in such a severe correction. Severe correction in the sense, I'm talking about the stocks which many of the retailers will hold, which is mid cap and small caps. I already told that these are into the bear territories. So nobody expected the market will remain so volatile, and they will remain down for so long of time. We have already broken around 21 years of record of 4 consecutive series. We have ended in red. This is the fifth series now, February, which will be ending in red if at all we close around these levels or lower. This has happened only in two times in the history of stock markets, in 1986 and 1994. So that is why they are always predictable. They are volatile. They will always give you a chance to enter at lower prices, and probably it is very difficult to anticipate the tops and bottoms of this market. That's a beauty. So that is what Mr. Nimiwala says for the stock markets. In continuation to the characteristics of multi-bagger stocks, we want them to be low debt to equity ratios. We want high ROE stocks. Also, we want the management to be highly motivated, ambitious, knowledgeable, and with high moral value, so that we know that the top management whose company we are buying wants to grow larger and larger in times to come. PE expansion, if it happens in your stock, that actually makes your returns much faster and quicker. So again, a quote: the stock markets is never obvious. It is designed to fool most of the people most of the time. That is exactly the beauty. So I always say that the top is made amongst all the good news, and the bottom is made amongst all the bad news. And you will start rising among the bad stories still lying. The beauty of the market is the market will fall with the bad news. The bad news will not be fully eradicated. They will not be fully removed. But as soon as market sees that it is in the price and the future is good, it is very quick to rebound. No, rebound. That's the beauty of the stock market, and that's why people will always feel nervous when they're buying at the lower levels, and the market will rise and it will surprise. And when the market is rising, you'll suddenly see there are a lot of good news and there's more to be earned in the market, and you will see a downfall. So that is the beauty of stock market, and that's why most of the people feel cheated. They feel it's a game of the large players, but no, you need to understand why it is done, because the bigger players can only sell their shares when there are good news around. The bigger players can only buy their stocks when there are bad news around. That is the reason why markets tend to fail you, they tend to fool you. But understand the characteristic of a market, and then if you try to do your investments, you'll always gain. So Motilal Oswal Services Limited was founded in 1987. It's a well-diversified financial services firm. The company has a network of around, which is spread around 550 cities and towns, comprising of 2,500 plus business locations operated by their business partners and around 1.6 crores customers. That's huge. Motilal Oswal Group offers services in capital markets. They also offer services in asset and wealth management, and they also do in housing finance. We'll go into deep on all these segments in future slides. So Motilal Oswal is among the top three brokers in terms of gross brokerage. The revenue split, if you see that they have earned around 71% of their revenue from capital market, which is 71%. Asset and wealth management contributes 18% to the revenue, and housing finance contributes around 11% to the revenue. The operational metrics, they have a huge MOM of around 4.1 lakh crores. That's again huge. The lending book, which they offer in their real estate and housing finance segment, it's around 10,500 crores, and the client base is very huge. It's around 60 crores, which is unimaginable. But that's the gain this company has done over the years. And the face value is so large. We all know Mr. Ramdev Agarwal, how he comes on social networks, how he comes on television, gives this piece of advice, gives confidence when the markets are down. So these probably the marketing face itself with the owner gives you a lot of customers want to attach themselves to this particular great company, which started as a brokerage company, but we all know where it is now. So, as we all know, Mr. Ramdev Agarwal talks a lot about power of compounding, which they have demonstrated for the last 37 years. They started in 1987. They started as a sub-broking outfit in potential portfolio services, and it was just 1 lakh rupees with that. Then, or by around 1990 to 1995, they were touching 10 crores and started retail and institutional equities. Then by 2006, they moved to around 107 crores of net worth, and the capital raised through private equity enters into investment banking, private equity, and wealth management businesses. So they diversified in 2006. 2007, they actually went public, and the subscription was surprised by 26.4 times, and they actually reached to 333 crores of net worth. Then the asset management company launches its maiden mutual fund offering. This was done in 2010, and the net worth reached to 946 crores. By 2014, they entered into an affordable housing finance business and started deploying free cash flows into treasury investments. Then by 2018, they crossed 1 million customers in wealth management. 2024, they recorded the highest ever yearly profit of 2626 crores. And by in the initial 9 months of FY25, they recorded the highest ever 9 months profit of 2700 crores, and the total client base have crossed 10 million, which is more than 1 crore. And the net worth now, as of now, it's around 11,569 crores. This is 9 months of FY25. So MOFSL has compounding machine has been extensively validated over the last decade. We'll see the financials. Why we are saying that the profit growth has been higher than revenue growth. That is fantastic. That your growing percentage of profit is much larger. MOFSL market cap has outperformed the Nifty 500 by 28%. Imagine. So if your Nifty is giving a 14% CAGR, it is given 28% more than that, which means that even if the market is performing at a certain percentage, the amount of research, the amount of stock picking is so good that you are able to beat your benchmark index with huge margins, and that's the compounding rate they've been able to achieve, which is phenomenal. The asset under advice have posted around 38% CAGR in last decade, which is fantastic. So revenue, as I told you, we've seen the previous slide also, they have grown by 31% CAGR. The PAT has been growing by 42% CAGR, so 11% more than revenue, the profit growth. The asset under advice is around 38% CAGR, it's now reached to around 6 lakh crores. The net worth is around 12,000 crores now, and it's growing at a 24% CAGR. The market cap of Motilal has been growing at 42% CAGR. Fantastic, and it has reached to 57,000 crores of a market cap now. Nifty 500 has only given you a CAGR of 14%, but you see revenue, PAT, asset under advice, net worth, market cap all have grown much, almost two and a half, 3 times more than the Nifty CAGR. That shows the company's strength, their research, their kind of relationship managers, the kind of management that they have, that they're able to drive such a phenomenal growth. So why it is happening so? Because they seek to sustain compounding machine effectiveness through its double engine model. What is the double engine model? So first is operating business, where you have diversified revenue and each business is managed by a separate CEO. Second engine is through treasury investments, where they have high liquid investments focus on healthy annual returns. Investments used strategically for operating businesses. Investments providing synergy and stability. That's the mantra they have. So they call it double engine to probably propel their business further. They are primed with disproportionate growth. Yes, it is disproportionate because if you're growing multi-folds in CAGR of Nifty, that shows that you are actually into a disproportionate growth. Why it is happening? Because the operating PAT clocked at 34% CAGR in last 10 years, which is again fantastic. And they are optimistic about future because the country itself is looking for phenomenal. We all know that by 2047, which is the Amrit Kal of India, we want to convert from developing country to a developed country, which means the market cap is going to grow of the overall Indian stock market by multi folds, and so is the pie of Motilal Oswal, and so is the growth of Motilal Oswal. The engine two, which is treasury investments, so the book posted on 40% of CAGR in the last decade, and they aim to maintain and improve this existing internal rate of return by of 20%. Dividend payout has been pretty decent. I not say too good, but 20% of operating PAT in the last decade. To maintain payout subject to working capital business growth, that's they aim to retain the dividend payout. Let's see. They're given a caveat that they only if they have working capital business growth needs. Net worth have been growing by 22% CAGR, and they want to maintain it and further improve it. Motilal Oswal's strong value proposition to clients. So they have research-led broking. They have loan against securities only. So they are into, a secure lending kind of a business. So they operate through mutual funds, PMS, AIF, private equity funds, real estate funds, home loans. They all form one kind of category. The third-party product distribution includes your insurance, bonds, FDs, mutual funds, AIFs, PMS, unlisted equities, and loans. So that's a diversification that they have in terms of their products. And in terms of advisory, they go for wealth advisory, in which they have further subcategories of investment charter, alternate assets, credit solutions, treasury solutions, and estate planning. And if you see in terms of corporate advisory, they are into IPOs, they're into merger and acquisitions, they're into QIPs, and they're into block deals. So, and we all know the kind of action which happens every day on these particular fronts in our markets on day-to-day basis. So if you talk about the big numbers of Motilal Oswal, so distribution network, they have 9,300 plus external wealth managers, huge number to play with. Then the geographical reach is phenomenal, 2,500 plus business locations, and they're serving clients from more than 98% of pin codes. Again, phenomenal. The relationship managers more than 2,500 plus, and they have more than 100 plus research team. The asset under advice is 6 lakh crores. The clients of AMC is around 6.8 million plus, and broking is 4.7 million plus. So again, very very big numbers from Motilal Oswal. So they're into wealth management, they're into capital markets, they're into asset and private wealth management, they're into home finance and treasury management, treasury investments. We'll see all these things as the time passes, as we move around in the forthcoming slides in detail. Some of the things. But this is very important slide because we all want to see the strong financial performance which the company is doing. So I've just picked up one quarter. This is Q3 of FY25, which is currently going on, and the last results which came. So they have declared a dividend of around 5 rupees per equity share. The asset under advice we already seen is plus now 6 lakh crores, which is 62% YOY growth. The net operating revenue is 1345 crores, which is 43% YOY growth. The operating PAT is 525 crores, 38% YOY growth. Treasury investments is around 8500 crores, and this is 44% YOY growth. Net worth has already reached to 12,000 crores, which is 40% of YOY growth. Lending book is 12,250 crores odd. This is again 44% YOY growth. ROE is 36%. The net active clients is 1 million plus, and this is at 25% YOY growth. The clients are again growing at 80% growth rate and now 11.5 plus million. Employees are 13,600 plus, so huge team with them, and this is going at 47% CAGR. The trailing 12 months net operating revenue is around 5,000 crores. The operating PAT has been 2,000 crores. The total PAT, which also includes outside clients, is around 3,304 crores. Market capitalization is around 40,000 crores, and the FY24 PAT ranking is 99 among all the listed entities, and the mid cap rank is 203. This is as on January 27, 2025. Again, huge numbers. Nothing to complain on this. So they focus on building diversified and sustainable revenue streams. So the consolidated net revenue mix is coming from brokerage, they're coming from net interest income, management fees and advisory, distribution, other operating products. The annual recurring revenue, which is ARR, and transaction based revenue, which is TBR. So if you see from FY24 to FY25, it's a 43% jump. And if you see from FY24 9 months, this is trailing basis, and 9 months of FY25 is around 41% jump. The annual recurring revenue is continuously increasing. If you see that we have now around 56%, this is only 9 months, so 23 months to go. And this is the, if you see 54%, if you see the trailing 9 months, it has increased from 54% to 55%. This is for FY24 to FY25. Now, leveraging on strong net worth for operating business growth. So, if you see the net worth, this is I'm comparing with 9 months of FY25. So the net worth of wealth management has been 3460 crores, capital market 765. Although I'll not go in the numbers in detail, but let's just focus on the operating PAT, which has been around 27 and 18 crores. The operating ROA is huge; it's around 36% in total. If you see the breakup, so wealth management is giving you ROE 25%, capital market is giving 38%, Ascent and private wealth management is giving you 35%. HFC is giving you 9%, and the treasury is giving you 59%. And in fact, the most of the gains they're getting is from treasury, which is around 1221 crores. So again, very good numbers. The source of funds, so they have borrowings also. The borrowings have increased to 14,000 crores because they're into lending business also. And the net worth, we all know it's around 12,000 crores, which has increased from last year to from 8,700 crores, which is again a good jump. So allocation of funds, so this is around, they have into net current assets and into loans and advances, investments and fixed assets. In total, they're around 25,681 crores, which has grown from 22,531 crores of March 24. So in terms of wealth management, they are number one full service broking house by gross brokerage revenue and highest broking RPU, average revenue per user in the industry. They have strong blend of 2000 plus internal relationship managers and 9300 plus external wealth managers. Extensive geographical reach of 2500 plus business locations covering client across 98% pin codes, and they have a market share of around 7.4% in cash and FNO premium around 7.8%. So again, good numbers. In terms of wealth management, so the strength of internal relationship managers and external relationship managers give it a very good blend. So they have around 2033 internal relationship managers, which in this is covered by 77 branches. Then they have around 9,300 external wealth managers. The total active clients is more than 1.6. They're around 16 lakhs plus, 1.6 million plus. The per client AUM is around 20 lakhs, 2 million, which we can say in million terms. And per RM, which is the per relationship manager, they have a AUM around 27 crores, and they're serving to around 143 clients. So that's how they break their system in terms of wealth management. So the wealth management has given a resilience performance. We already seen the numbers, but just to quickly go through, the AUM has increased from 1.84 lakh crores to 3.08 lakh crores, which is a 67% jump from December 23 to December 24. The PAT has grown from around 164 crores to 190 crores. And if we talk about the trailing 9 month basis of 24 and 25, it has grown. It has crossed from 402 crores to 592 crores. This is the breakup of wealth management product of Motilal Oswal. It's not the entire company. It's just particularly only wealth management. Net revenue breakup of the products in the wealth management. This is growing recurring revenue share. So if you see the overall revenue of wealth management is growing by 33% CAGR, and the 9 month basis they have grown by 41%. And if you see the brokerage business also is growing from 205 to 218 crores and 584 crores to 766 crores, and the overall pie is also increasing, and there are now around 1740 crores of net revenue from wealth management businesses that they have. If you see the channel breakup for internal and external, it's around pretty much the same, not changing much. But FY 24-25, it's 51% has go down to 42%, but the internal has increased from 49% to 58%, and similarly is the external pie. So that's the revenue breakup of the wealth management of this company. Now they're focused on building the distribution business disproportionately. So they're how they're doing it by strengthening distribution business vertical with growing RM base, teams aligned towards wealth management solution oriented products and services, pioneering the move to advisory with transparent and interest aligned with clients, Rise Super app, which they have in terms of Motilal Oswal app, which we have on the mobile. This is all-in-one super app offering various internal and external products. We've all seen the map of Motilal Oswal. It's very encouraging. It's very good. It gives you all the features. A very nice app. So asset and private wealth management. So it's a blend of manufacturing and distribution capabilities. They're focused and leading player in alternate assets, robust investment and risk management process. The AUM is around 2.9 lakh crores and net sales of around 24,000 crores in Q3 FY25. This is we're talking about the asset and private wealth management segment of Motilal Oswal. In terms of breakup, so if you see the recurring revenue is increasing from 350 crores to 551 crores, and the brokering business and transactional business is going from 965 crores to 142 crores. Even the PAT has increased from 234 crores to 604 crores, and net sales have increased from 24,222 crores to 50,600 crores. So that's the kind of graph, very good numbers and very good steady graph of Motilal Oswal on asset and private wealth services. We're talking about this particular segment. Asset management, if you see, the four major things are that they have the listed equities, they deal in liquid asset in equities, which includes mutual funds and PMS and AIF. Then they're into unlisted equities also, which is private equity plus real estate funds. Then they have a fee earning AUM of 1.4 lakh crores. So they are managing the asset, which is giving them a fee on an annual basis. The quality investment team with a successful track record. That's another important thing. The AUM breakup. So AUM has increased from 74,000 crores to 1.41 lakh crores, which is 90% jump in 1 year. And the net sales have increased 10 folds from 2006 crores to 19,000 crores. So they have got very strong inflows driven by a strong AUM growth. If you see from trailing 9 month basis, it's around 42x. It's around 42x, and this is 9007 crores. So it has increased to 37,781 crores. 71 crores. Asset management, if you see, it gives visibility of higher PAT growth. The PAT has increased 65% from Q3 FY24, which was 83 crores to 137 crores, and on 9 month basis from 227 crores to 358 crores. The revenue breakup also you can see in the slide, it is growing by 54%, 48% on yearly basis and 9 month trailing basis. So asset management, if you see the 1 year performance, the total number of strategies, this is MF plus PMS plus AIF was 13. Out of that, 10 has outperformed the benchmarks. So almost you can say 80%. Mutual funds, they have 5. Alternates of PMS and AIF, they have 5. Outperforming strategies, which is percentage of AUM, is 97%. So just a 3% schemes are underperforming benchmark index on Nifty. Otherwise, all are outperforming. Fantastic number. Uh, so if you see the particulars, the SIP market share has increased from to 3.8%. The mutual fund gross sales market share has increased to 5.8%. The mutual fund net sales market share has increased to 9.7%. So the market share is continuously they are gaining. The gross flows is also increasing. Now it is touching 23,300 crore, which is a gross growth of around 5x from last quarter of FY24. The SIP inflows again up, it's again gone 4x, which is huge. And it will, because the track record is so high that people like to have SIPs in their company. So it's grown from 769 crores to 2922 crores. Uh, and the net flows increased around 8 times from 2400 crores to 18,500 crores. Granular AUM with growing penetration. So penetration has increased from 81% to 85%, and the individual AUM has increased from 34,840 crores to 83,540 crores. Again, I would say around 2.5, 2.6 times kind of growth. This is an AUM of asset management. The mutual fund unique customers have also grown. The unique folios has grown from 2.5 million, so around 25 lakhs to 67 lakhs. That's again huge. Uh, Again, I think 2.5, 2.6 times kind of a growth, and the penetration has also increased from 6% to 13%. So again, huge, good numbers from Motilal Oswal on this front as well. Now we talk about private equity and real estate. So sixth real estate fund, which was raised in 1750 crores, and final close expected by Q4 of 25. So in private equity, if you see the gross internal rate of return is also pretty decent, 26.8% IBEF1, followed by IBEF2 of 19%, IBEF3 of 27%, IBEF4 of 23.6%, and the fund size is also increasing and is expected to reach by around 4,500 crores by FY33. In terms of real estate, again, by FY31 is expected to go to around 1,600 crores. The market value of the AUM is already 16,915 crores, and we expect the percentage terms also to grow from 19.5 to IRF6 to 22.6%. So again, good numbers on this asset, private equity and as real estate as well. Now the next vertical that they have is private wealth management. So they focus on catering to ultra HNIs, ultra high net worth individuals with a net worth of more than 25 crores. High quality team of 600 research managers and 3+ years vintage of 29%. Integrated platform with solutions offering across asset management, lending, investment banking, and institutional equities. They're growing clients under assets management of 1.5 lakh crores now. The AUM has increased from 1.1 lakh crores to 1.49 lakh crores, which is around 34% increase from December 20 to December 24. The net sales have increased from 3,500 crores to 5,300 crores, which is 49% jump. And on a trailing 9 month basis, around 60 on a 9 month basis, it's 65% increase from 7,800 crores to around 12,800 crores. So the private wealth management is giving them strong momentum, and this is again the vertical of Motilal Oswal. The private wealth management, which is the ARR, which contributes around 50%. So that is the annual recurring revenue that they have, and it is contributing around 50%, which is good. Which is good because the recurring revenue, if you're getting it, means your revenue is fixed. That kind of a net worth, that kind of a sales is booked in your books. That's a good thing. Rest of 50% depends. I know if the market is good, you may have more revenue. If the market is bad, you have less revenue. So it depends on many permutation and combination. But the recurring revenue will always keep on coming to you year on year. So the contribution is 50% of the total wealth that they manage. That is good. So net revenue breakup, if you see between ARR and TBR, is it's again growing. So if you see of Q3 FY25, it's 160 and 118 crores. Total 278. It's again a 61% jump. And on 9 month trailing basis, around 48% jump. But again, the pie is increasing. So from the annual recurring expenditure has revenue has gone from 220 crores to 341 crores. The PAT has also increased by around 57% on a year-to-year basis, and on a 9 month trailing basis, around 45%. So that is again a good thing. And if you have a recurring revenue, it gives you more confidence as an investor. On a private wealth management, so they focus on improving productivity and margins. So strengthening product capabilities, targeting ultra high net worth individuals and family offices, expanding presence in tier 2 locations. There were around 15,000 families now. Per family AUM is around 10 crores, and the per relationship they're managing around 25 families with an AUM of 250 crores. That's huge. That's good. In capital markets, they have two branches, so institutional equities and investment banking. So in terms of institutional equities, they are covering around 300 companies for 24 sectors, valuing 70% of India's market cap. Strong team of 140 plus employees catering to 80 institutional clients. Investment banking completed 35 deals with total of issue size of 46,000 crores plus during 9 months of FY25, with new leadership team and best ever mandate pipeline share in IB League table to improve. That's on the investment banking front. In terms of capital markets, so they ranked number one on QIP lead table in 9 months FY25. You can see what the major deals they have done. So they have done on Varun Beverages 7,500 crores, PNB 5,000 crores, Five Star Finance 4,500 crores, Bank of Maharashtra 3,500 crores, Acme Solar 3,000 crores, so on and so forth. So around you can say 12 major deals they've done in terms of QIP. The PAT has increased in capital markets revenue, if you see, by 50% on a year-to-year basis, and if you see on the 9 months trailing basis, around 28%. Net revenue has also increased very robustly, as you can see in the slide. The numbers you can see, and all the numbers are very high numbers of this company. That gives a lot of confidence. And it's not essential that you continue this kind of high performance. Of course, on a larger base, it will start slowing down in terms of growth on percentage, but in absolute terms, it will keep on increasing. Home finance, so they're into building retail granular book with wide geographical distribution, expanding revenue, expanding relationship managers tend to drive disbursement growth, scalable operating model built on holistic technology usage, and the credit rating has been AA plus by all three leading rating agencies. That's we're talking about the home finance. So disbursements in the home finance have increased from 236 crores to 394 crores in Q3 of FY24 to Q3 of FY25. On a 9-month trailing basis, increased from 527 crores to 1014 crores. The loan book has increased from 3700 crores to 4300 crores, and the sales have increased from 856 crores to 1246 crores. So again, good performance and a good rise in terms of percentage. Profitability is also growing. If you see, the net worth has increased from 1253 crores to 1393 crores. The net interest income has increased from 234 crores to 252 crores, 252 crores on a 9-month trailing basis. The PAT as also increasing, but it's pretty. If you see on 9 month trailing basis, it has down by around down to around 93 crores from 100 crores. If you see the home finance parameters, they are pretty good, but the net, because the net net NPA, it's only around 1.3%, and when the gross NPA is around 2.1%, the leverage is around also around 2x, which is pretty decent in this industry. The ROE is great, and it is increasing from 10.8% to now uh, it is around 11.1%. ROE is pretty increasing on a quarter on quarter basis, so 3.2% has increased to around 3.3%. NIMs also fine, so all these numbers are looking pretty decent and pretty robust. Now the biggest field that they have is treasury investments. That's the biggest business which they earn from. So they have a healthy in terms of around 20% on a cumulative internal rate of return basis since FY14. Uh, Helps in absorbing shocks in an uncertain environment, helps to grab new opportunities and foster the existing businesses. And they have the skin in the game, they have the nick in the game. They know how the business is done, so they know the inside and outside of this particular business. So this revenue is around 11,000 crores plus, and they are into sponsored schemes of around 7,400 crores and promoters for 3,700 plus crores. The total treasury investments is 589 crores. It increased to 8,400 crores from December 23 to December 24. Uh, the cost has increased from 3,000 crores to let's say 3,860 crores, and the M2 has increased from, which is the mark to market, has increased from 2,900 crores to 4,600 crores. The PAT has also been increasing. So if you see on a 9-month trailing basis, from 961 crores, it has gone up to 12,021 crores. And the gross revenue has increased from 1,045 to 1,654 crores. That's again a good number. Yes, they have a highly experienced team. I should not go into deep because we all have been seeing them a lot on the television. But still, we all know Ramdev Agarwal. He's a chairman. He's a CA. He has around 40 years plus kind of experience. Then they have this Motilal Oswal, who's the MD and CEO. He's again a CA. He has also had a 4 decadal experience in operations. Then we have Naveen Agarwal, who's a group MD of MOFSL. He is CA, ICWA, CS, and CFA. 3 decades of rich experience in building and running businesses. Joined the group in year 2000. Then we have Ajay Menon, who's the CEO of Wealth Management. We have Pratik Agarwal, who's MD and CEO of Asset Management. Since they are divided all the verticals, so they have all different CEOs, which we saw on the second slide also. They have Rajat, who is the CEO of Institutional Equities. Then they have Vishal Tulsayan. He is the executive chairman of MO Alternates. Then they have Amit Ramchandani, who's the CEO of Investment Banking. So different people which are looking after the different segments of the company. We have Sukesh Bhowal, he's the CEO of Housing Finance. We have Ashish Shankar, who's CEO of Private Wealth Management. We have Shali Bhadra Shah, who's the CEO, who's the Chief Financial Officer. He's also a CA and 22 years experience in finance and strategy. Then we have Pankaj Purohit, who's a CTO of the company. Then we have Niren Srivastav, who's the Human Resource Chief. We have Sandeep Valunj, he's the CMO, which is the Chief Marketing Officer. He's from IIM Ahmedabad, 28 years plus experience. Then we have Neetu Juneja, who's Chief Compliance Officer. She's again a CEO and 24 years of experience in the regulatory functions. And then we have Siddharth Surekha, who's the Chief AI Officer, which is MBA from Kelly School of Business and Master of Science. So very learned people. I post this presentation on my link as well. You can see in detail. I not be easy difficult for me to read all the qualification experience and all. It becomes a longer video, but believe me, these are very highly qualified and highly experienced individuals that they have in Motilal Oswal, and that's the reason why they're able to grow so long and so high numbers. Strategic brand leadership initiatives we all see in TVs and during various ads. I should not go in detail, but you all see a ad in the TV from Man from Motilal Oswal campaign. Then they also have their boards. This is on Motilal Oswal Malad West Metro Station. Then Oswal Tower in Bangalore. Then so these are all the ads and campaigns that they do for promoting their business, and the strategic alignment that they have with different leadership channels and different leadership platforms. Now, what is the robust digital infrastructure? Because you would have seen Mr. Ramdev Agarwal saying a lot that wherever the word internet is added, it gives you exponential growth. So they're into data science. We have their AI-enabled smart research on mobile apps, their hyper personalization of all digital campaigns, alpha generator AI-powered research recommendation system. They have smart trade reconciliation system for improving compliance efficiency. Technology powered growth. So their research collaboration with IIT Mumbai, comprehensive customer onboarding process integrated with technologies like account aggregator, reverse penny drop, and advanced OCR, etc. Digital acquisitions and startup collaborations. They're into digital infrastructure, moving into cloud based modular architecture, rapid application development platform with new age technologies like Flutter, which is from Google, centralized platform for client and partner servicing, collaboration with fintechs and financial institutions, integrating open source platforms, implementing faster disaster recovery FDR mechanism, and digital products. We all know Rise, which is their app, research of 360 plus subscriptions, launched Motilal Oswal first all new platform for external wealth managers. Then they have Strat X, which is Algo Marketplace, 7 exchange algos listed in Q2 or FY25, launched Advisor Co-Pilot, which is empowering advisor to provide high quality advice to clients. So all this form a part of their digital infrastructure, which is very robust, expanded, diversified, and covering all dimensions of digital platforms. Increasing investments in building Motilal Oswal a talent powerhouse. So they have now around 13,650 plus employees. They were diversified levels across the group. They have around 5,600 plus gross hires in FY25, which includes 280 plus senior hires in FY25. With focusing on becoming a talent powerhouse through a bouquet of talent-related interventions, almost 7 lakh learning hours clocked in FY25. That's huge. So all these are platforms you also can use. 200 plus talent employees being covered, 750 managers being covered, hiring 100 plus future leaders, and they have a sprawling 17-acre Motilal Oswal Learning Academy, which is coming up, which is planned for putting or giving all these learning advices or learning solutions. So Motilal Oswal is well geared to tap growth, wealth opportunity in India. See, we all know that India is going to become a developed country, which means that the current 3.3, $3.4 trillion of economy is going to grow at around more than $30 trillion by FY47, which means that at present we have HNIs, and we're calling HNI, which are high net worth individuals, which have more than 10 lakhs, ultra high net worth individuals, which have a value for more than 3 crores, and we have billionaire, which is more than 100 crores of worth, which is assets. Now, if you see the number of individuals in 2022, we have HNIs around 79, let's say 7 lakhs 97,000, around 12,000 ultra HNIs, and then we around 161 which are into billionaires club. But this is already expected to increase quite a lot, and by 2027 we'll have individuals of 195 which are into billionaires club. We'll have 19,000 people who are into ultra HNIs clubs, and then we'll have 16 lakh people which will be in the HNIs club. If you see the potential wealth, if the billionaires club, it will be more than $195 billion. Ultra HNIs $574 billion, and the HNIs will be $1657 billion. So a potential wealth opportunity of $2.5 trillion, which is huge. It is almost equal to our GDP. Now, why I'm so bullish on this particular segment, we all know that the stock markets will continue to increase, the number of demat accounts are increasing, the number of SIPs are increasing, the number of people interested in stock market investing are increasing, the overall pie of savings which is going into equity market is also increasing. That is why I'm bullish on this company. This company is very old, 1987 it got established, and it has very you know a group of people which are highly focused and very experienced and with good domains. So economic takeoff, India is likely to retain its position as a world fastest growing major economy at least for 2 decades. That's what I guess. And the India's GDP is expected to grow from $3.7 trillion, which is present, to an estimated of $30 trillion by 2047, which is 9.5 CAGR. But if you listen to some of the economists who have tracked many developed nations, the figure is $50 trillion. Although the official figure always remains $30 trillion, but the good economists who have done this chartist, who have done this charts, who knows how the country, when it tries to reshape itself from developing to developed countries, they grow even faster. and that is why most of the economists are predicting a $50 trillion kind of economy by 2050. That's what the some of the economists are predicting, but we'll still stick to figure of $30 trillion, which this particular company is showcasing. And the gross domestic saving, which is very important. Today it is 14 trillion US dollars. It will grow to 126 trillion dollars. So you will have a saving of around 126 trillion dollars. Now this can go into many directions. It can go into FDs, it can go into equities, it can go into land investments, or real estate investments. So but this is the amount of saving that you have, 126 trillion dollars. Today we have a GDP of only $3.3 trillion. Imagine the kind of savings which are there in India. It's huge. And that's why I'm saying, for any country to grow in the stock markets, you need the liquidity, and the liquidity thrust is here because the savings are huge, and this is growing multifold from year on year. Another important chart. So the financialization of savings propelling equities. If you see, only 6.9% of the money is coming at present into the equities, and the majority of chunk is going into bank deposits and properties and insurance funds, which is, I would say, lesser return than probably the equities which have given for the last 20-30 years. In terms of percentage household assets, so around 6.9% that you've seen, that is the portion of saving which is going into the stock markets. If you talk about developed nations, it is around 45%. So imagine the kind of liquidity our people can in fill with our stock markets today. These foreign institutional investors or FPIs, they take a ride, they are able to earn a lot, they have a say, they dominate our markets. But believe me, if that 6.9% even changes to 10% or 15%, all these goras will be out, all these foreign players will be out. It will be only our players who will be dominating the markets. So if our internals are good, we'll go up in the markets. If the our markets, our internals are bad, we'll fall in the markets. We'll be purely playing or purely playing, we'll be plainly reacting to our own benchmarks. At present, we are reacting on internal benchmarks. Also, we have to react on global benchmarks because the 14% of our entire stock market is owned by foreign institutional players. So they have a big say. That is why we have to see both. But if once you have this pie increasing and our retailers' power increasing, then the effect of global markets will be very less on India. It will be there. We cannot be left out. We cannot be totally away from the shocks. But at least there will be a resilience. Nowadays we have a resilience, but it's very timid. It's very weak. Now in future we might have a strong resilience, and that's what we want actually. That's what everybody talks. That is the talk of the town. The demands have increased from probably 5 lakhs or so in December 14 to around 20 crores by December 2024. Imagine. And it is still a long way to go because we have 140 crores of population. We're just only 1/7. We're just 21, just 20 crores. And out of these 20 crores, many are dormant. We don't get a feel of what are the active demand account holders, but we all know it's very less. So, digitization driving exponential retail participation, strong addition of demat accounts and SIP flows signal a significant runway for sustained growth, with projections indicating a trajectory of over 30% for the medium term. And even if you see the SIP flows, it was just 3,000 crores in December 16, and now it's around 26,000 crores in December 24, which means approximately we are giving around 3.25 lakh crores kind of money to our SIP wealth managers to put in the stock markets, and to absorb the shocks when we have this global turmoils. This is only the SIP figure. There are a lot of money which is going into direct investing. Then a lot of money comes from family offices. It comes from ultra HNIs, HNIs. It also comes from insurance. It also comes from pension funds. So a lot of money and a lot of equity. There is a place, there is a venue, there is opportunity to be included in the stock market. And it's already coming. It's only going to increase from here. Fundamentals we already discussed in some of the slide, but I'll just give you a top line fundamental. So market cap is of this company is around 35,000 crores. The P is very decent, it's around just 11. The ROC is fantastic, more than 20%. ROE is again fantastic, more than 32%. The book value is 185. So if you see the stock price today, I think it's around 6. 2630 odd. So around one third of it is the book value. Sales growth has been pretty good. It's around 35% for last 3 years. EPS is 55 on a trailing 12-month basis. The promoter holding is again fantastic, around 70%. And they're sitting a lot of cash of around 11,000 crores. Price to book is 3.32. Interesting value is again very good, 772 crores. So it's trading actually a discount because it's available to you at 630 rupees. And I've told you on the first slide itself that this market is giving you an opportunity. This market is giving you an opportunity to enter into uh, these good stocks at a good, reasonable, cheap price. The dividend yield is around 0.82%, which is okay, not bad, not good. We expect it to slightly increase, but let's see. They're into lending business, that's why they're not able to pump their money entirely. They also have a debt because they're into loaning business. They're into debt financing. They're into housing finance. That is why they have a loan also. But all these loans are secured loans. They're not unsecured loans. There's nothing to worry on that. And they have a debt of around 15,580 crores. So that's for the fundamentals. Now we will go into the screener website to see other parameters into detail. So we'll go. We are already reached to the screener, and we'll go into the financials. So I'm not generally bringing all these facts into the PPT because one of our friend has told that it will save your time and it makes sense also. We've seen the major parameters. So I'll skip it through and we'll go to the other parameters. So this has been the stock performance, and if you see, it's around it is trading at around 600 rupees kind of a thing. Of course, when it was IPO in 2008, it was around 100 kind of a stock that came, and it's around already been a multi-bagger. It's given you success returns, but it has a capacity to grow multi-fold from here as well, because this is the business, and this is the you know true for any kind of a country which grows. We all know what the stock market has done for US, Japan, China, and India is another league which is entering to, and these markets will be which remain they'll create a lot of wealth for many people. So if the wealth is being created for many people, Motilal Oswal itself cannot be devoid of it. They are the highest experienced people, they have the highest diversified people, they have into many businesses, they know in and out of stocks, their research teams are very good. So it's not that they will not be able to participate in this growth of Indian stock markets. They'll be the leaders of it. As of now, they're leaders and they will continue to be leaders. And you see, we saw in one of the slides they're beating the benchmark index by 20 benchmark index returns, Nifty returns by 28%. That means they will continue, and we all know that India has given a return of around 14% CAGR for last so many months, so many years, decades. And the kind of demographic advantage which we have, it will continue to give for at least for next 20, 30 years. And if they continue to grow at the particular, they are beaten by 28% the CAGR. If they are able to do that for many decades, I think the stock value will be 100x easily from here. Pros and cons, they don't have any cons. That's a great thing. So in terms of pros, the company is expected to give a good quarter. That's fine. Companies delivered a good profit growth of 52% CAGR for last 5 years. The company has given a good return on equity of track record 3 years of ROA of 25.3%. The company's median sales growth is 40% of last 10 years. So in spite of all the downturns, we all know that we have entered into a COVID in 2020. We had a small recession in 2022. Today also we're into bear market. But all these cycles they have seen, they've covered, and still they have able to gild their sales and ROE of such a high standard. Peer comparison, we have other companies also, but why I give this company? One, because the PE levels are very good. It's trading at around 11 times PE. I found this to be good. Also, the kind of management team that they have, the kind of experience that they have. I was seeing one research in which 80% of fund managers in various entities, various companies, or brokerages, or asset management companies put together have less than 2 years experience. So the fund manager itself are very naive. They are entering into this business now. But Motilal Oswal, we already seen the slides. They have huge research team, very experienced people. So that is why I picked up this company, and I thought this company uh, is one company which can give you a multi-fold returns. Quarterly returns and operating property have been growing from years. So from December 21 of 448 crores to it has reached to around 1067 crores in December 24. And September 24 was even good, around 1800 crores. Net profit, if you see that it has been increasing again. So from 240 crores, it has reached to 1122 crores. If you see the operating profit from March 2013, which was 2913 crores, and it has reached to 4067 crores by March 24. I don't know how many times jump. This is around what, 20 times jump in last 10 years. And on a trailing 12-month basis, it's 5500 crores. So it's around 25 times. That's great. So journey has been very good, and that's how you have high CAGR values. Even net profit has increased from 110 crores in March 2013 to 2446 crores by March 24, and on a trailing 12-month basis, around 3296 crores. Again, good jump, good steady performance. That's what we want. We want company with strong performance, strong history, strong fundamentals, a good pie of business, and we want to have a company in a domain which is catering to a sector which will just keep on growing from here. That's perfect recipe. The compounded sales growth of last 10 years has been 31%, 5 years 24%, 3 years 25%, trailing 12 months 56%. Compounded profit growth has been 42% in last 10 years, trailing 12 month basis 75%. Stock CAGR anyways has been good. I'm not going to details on that. Return on equity has been very good, more than 20%. So last 10 years 22%, 5 years 24, 3 years 25, and last year around 33%. So I think you can't have a basic fundamental values better than this. So they don't have any working capital requirements, but they do a lot of borrowing because they are into home business, home lending business, and also they want to do their own investments. That's why they take borrowings. But again, as I told, they're all secured loans, secured borrowings. Nothing to worry on that, and they have good reserves also, around 11,000 crores by September 24. So that they're pretty good in reserves as well. So nothing to worry on debt because it's all secured. Net cash flow also has been good, 2,700 crores by March 24. So it's pretty good cash flow. Nothing to worry on that. Again, cash conversion cycle has been good, so it has reduced from 337 days to around 99 days by March 24. Again, that's pretty good. Shareholding pattern has been pretty same. In March 2022 it was about 70%. So by December 24 also around 69%. So it's just 1% here and there. FIs own this company a lot, of around 6%, and DIs also own this company a lot, of around 6%. So DIs and FIs put together around 12%. So 68% is with the promoters and around 12% with the fan DIs. And I always see this figure because these are the people who have a lot of in-depth knowledge to, do a lot of research, find out internal how the company is there. They have good research base. They have good set of people going into various minute details to find out the company's fundamentals and company's growth trajectory going forwards. So if they're owning it, probably they also know the company is good. And if they're owning it, we should also own it. That's what I feel. So this is all about this company. Overall, I feel this company has very strong fundamentals. This is catering to a business which is expected to grow multifold from here. The company is good, the founders are good, the overall team is very good, very experienced people, and knowledgeable people with good educational backgrounds. Considering all this and the kind of retailers boom we are seeing into the market, the kind of expectation that everybody has from our country, I think this company should be a leader. This company should actually give you a multiple return going forward. That's my view. And that's all for the presentation for today. Hope you liked it. That for the seventh stock and seventh series. We'll all wait for the eighth one to come. So let's see. Till that time, enjoy your weekend and enjoy your time. Enjoy the markets. Thank you so much.